Hey there, welcome to the Kisaki. My name is Lakal and this series is fully dedicated to whoever wants to learn how to trade Forex and make a living out of that. This is the first episode of the series where you'll be learning the basic concepts of Forex, including what is Forex and how to trade Forex. While you're watching this episode, if you have any questions or doubts, please put them in the comment section, or else you can reserve a time slot for a quick call with me by visiting the URL thekisaki.com/connect. To get notified right away when a new episode gets published in this channel, don't forget to subscribe to the Kisaki and enable alert notifications by clicking on the bell icon. Alright, let's get started. The term Forex is a shortened version of 3 words. It has been formed by shortening 3 words: foreign currency exchange, FOR from foreign and EX from exchange. That's how the term Forex has been formed. Knowingly or unknowingly, we are doing Forex transactions daily. If you are planning to go to the UK for your Masters, you might be planning to pay the tuition fee for your Masters program. Then the university will ask for you to settle a part of your course fee of 10,000 British pounds. If you are from Italy or France, you don't have British pounds with you. What you have is euros. In such cases, you will have to sell euros that you hold to buy British pounds and make the payment to the university in the UK. This is a simple Forex trade that we might have done or will be doing. If you take another example, imagine that you live in Australia and you are placing an order on eBay. The seller is requesting the payment in US dollars, but as you reside in Australia, you don't have US dollars with you. What you have is Australian dollars. So when you're making the payment to your eBay order using your credit card in Australian dollars, your bank will take the responsibility of converting the Australian dollars to US dollars and making the payment to the seller. Though this sounds like a simple automated operations, it's actually a slight complex process. And that's the general experience that most of us have when it comes to Forex transactions. However, there are many people out there in the world who make a living by trading Forex. Just like your bank does when you're paying for your Masters in British pounds, or when you're paying for your eBay order, the bank will be selling the British pounds or the US dollars at a slightly higher rate than what they have bought it for. And guess what? They make a profit out of that. If we go back to the 1990s, the Forex market was only open for institutional traders. What this means is, retail traders like you and myself couldn't trade Forex before 1990s. However, in mid-1990s, the ecosystem and the policies of Forex market got upgraded, and the retail traders like you and myself got the opportunity to trade Forex. Forex is a trading product. In Forex, there are instruments that we can trade. When it comes to a stock exchange, we could trade shares of a company that's listed on a stock exchange. Likewise, in the Forex market, we are able to trade currencies of different countries. As a standard, we are writing the instruments in Forex as a pair joining 2 currencies together, like USD JPY, AUD USD, USD CAD, GBP USD, and etc. We are naming 2 currencies in a Forex currency pair as a base currency and the other one as the quote currency. The currency on the left side is the currency that we call the base currency, and the currency on the right side is the currency that we call as the quote currency. If you are living in the UK and if you are planning to go to the NYC for a business event, you will have to buy US dollars by selling the pounds that you have with you. In that case, the quote currency will be British pounds and the base currency will be US dollars. If you are going to Japan from Australia, you will have to buy Japanese yen by selling Australian dollars that you have with you. In that case, the quote currency of the transaction will be Australian dollars and the base currency will be Japanese yen. To explain it even a little bit further, let's take the USD GBP example. This currency pair tells you what you'll be buying from which currency. This means you'll be buying USD by selling GBP that you have with you. So remember, the currency on the left side is the base currency and the currency on the right side is the quote currency. So as you know the basics about Forex as of right now, you might be wondering about how you can generate a revenue by trading Forex. Let's imagine that the price of a US dollar is 78 cents British pounds today. You're making a prediction that the price of a US dollar will come to 82 cents British pounds later today by using the fundamental analysis and the technical analysis that you'll be learning later in this series. You can buy 10,000 US dollars at 78 cents British pounds and sell them when the US dollar price reaches 82 cents British pounds per each. By doing so, you'll be able to generate a profit of 4 cents British pounds from each dollar that you have bought earlier. So the total profit of the trade will be 400 British pounds. That's how we are able to generate revenue by trading Forex. Just like buying low and selling high, you are able to sell high and buy low to generate a revenue. We call this mechanism as short selling. Unlike the Forex exchanges, the Forex market is open for 24 hours for 5 days. Forex market opens around 10 am Monday from Auckland time, 7 am Monday from Tokyo time, or 9 pm Sunday from London time. Though the Forex market is open for 24 hours and 5 days a week, it's not active throughout the whole time. This means that though the Forex market is active for 24 hours 5 days a week, we are not able to see volatility in price for the Forex instruments throughout the market hours. This is happening because of the main sessions in the Forex market. There are 3 main sessions in the Forex market, and we name them as Tokyo session, London session and New York session. Each of these sessions are formed around the business hours of different regions. For example, the Tokyo session is based on the business hours including the stock exchange open hours of the Asian region starting from New Zealand, Australia, Japan, Singapore and other major countries in the Asian region. There are currency pairs that are getting active in each of these sessions, and some of the currency pairs are getting active in multiple sessions as well. If we take the USD JPY example, the USD JPY currency pair is getting active in the Tokyo session as the JPY is the Japan's currency. Likewise, because USD currency is getting active in the New York session, the USD JPY currency pair is getting activated once again in the New York session. However, if you take the AUD JPY currency pair, it has high volatility only during the Tokyo session. This is happening because both AUD and JPY currencies are in the Tokyo session. We have great benefits of having 3 different sessions in Forex market when it comes to trading opportunities. If you are studying at college, or if you are doing a part-time job, or if you are doing a day job, you can choose an active session in the Forex market when you are free to trade Forex or to learn to trade Forex. There are many people who ask me these questions, and I'm sure that some of you also will have this question. Why can't we make a good revenue by trading stocks, and why we should trade Forex? To answer these questions, I will have to dig up some stats to show you. Forex is the largest financial market in the world. The daily turnover in the Forex market is around 7.5 trillion US dollars. If we compare the same with the world's largest stock exchange, which is the New York Stock Exchange, it only has an average turnover of 18.9 billion US dollars. If we compare the Forex market to the world's largest stock exchange, there's a gap of couple of $1 trillion when it comes to the turnover. Since there's more liquidity in the Forex market, there are many opportunities to make profitable trades. Because there's a high liquidity in the Forex market, anybody with a small trading account can manage to grow the account in Forex market compared to a stock exchange. Therefore, Forex is an efficient trading product that has a low opportunity cost. So we talked about what is Forex, what are the instruments in Forex, what are the market hours in Forex, what are the sessions in Forex, what are the benefits that we have from different sessions, why Forex trading is profitable for us. We're looking forward to discuss few more basic concepts in Forex in our next episode. If you have any questions about what we discussed in this episode, please put them in the comment section. Or else, if you need a free consultation, you can schedule a quick call with me by visiting thekisaki.com/connect and reserving a time slot. If you are able to learn something new from this episode of the series, please consider subscribing to the channel. To get notified when we release a new video right away, don't forget to enable alert notifications by clicking on the bell icon. You also can follow us on Instagram, Facebook and TikTok. And it's a wrap. Hope you enjoyed it, and thank you so much for watching. I will see you in the next one. Until then, stay safe and take care.